So we know the PPP loan application closed August 8, so you can no longer apply for the loan, but a lot of small business already getting the loan and either in the almost end of their cover period, the 8-week cover period or 24-week cover period. So the next thing you need to consider is how to ask for the forgiveness. I'm going to go over the today's agenda. So first I want to go over the changes in the Flexibility Act that was passed on June 5th. There's quite a bit of changes in this Flexibility Act, so I'm not sure if everybody is aware of those changes. Then second, I'm going to go over the forgiveness application, what kind of documentation you need to gather and ready for the submitting the application to the lender, to the banks. Then I'm going to go over some additional guidance from Small Business Administration that was issued on August 4th. There's some clarification on what can be included in the payroll costs and for the non-payroll costs. Lastly, Kelly Buck is going to go over the financial accounting perspective of the forgiveness. So what are the changes in the Flexibility Act that was passed on June 5th? First, it gives us additional 24 weeks for the forgiveness, or we call it cover period. So before the Flexibility Act, you only have 8 weeks to spend your PPP money. Now, if for any PPP loan took out before June 5th, you have the choice of using 8 weeks or 24 weeks. For the PPP loan took it out after June 5th, you have to use the 24 weeks. Later, I'm going to talk about the new guidance that was issued on August 8th. You also talk about you can use the regular cover period for the non-payroll costs, but you can use the alternative payroll cover period for your payroll cost. As everybody may remember when you apply for the PPP, when calculating your loan amount, calculating your average monthly payroll cost, you have to cap the compensation salary at $100,000 annualized amount on an annualized basis. So for the forgiveness, if you take $100,000 annualized salary, the limit divided by 52 weeks times 8 weeks, then you get the $15,385, which means that for the forgiveness calculation for each employee, you can only include up to $15,385 for the salary if you are using the 8-week period. If you are using a 24 weeks period for your forgiveness, then the limit per employee is $46,154. That's only for the salary, and the salary include paying all the taxable wages like vacation, bonus, severance pay, all that. And in addition to that limit, you can add the healthcare, the insurance premium, the retirement plan contribution, and also the state and local payroll taxes, the employer state and local taxes, which include the California employee training tax or the unemployment insurance. If you are an owner employee, your salary will be capped at $20,833 at the maximum amount, or 2.5 months of your 2019 total compensation from the company. If you are an S-Corp shareholder and if you didn't take out any salary in 2019, then that could be a problem because your base salary will be zero. So then none of your salary can be included in the forgiveness. So here's the example. Becky is a sole proprietor. She filed Schedule C with her personal income tax return. In 2019, her net income from her business is $100,000. She has no employee. She qualified for the loan of $20,833, which is the $100,000 limit divided by 12 months times 2.5. So when she applied for the PPP, this is the loan amount that approved. If she decides to use 8 weeks as a forgiveness period when we apply for the forgiveness, The maximum amount that can be forgiven will be limited to $50,385, plus any rent, interest, or utility she paid in the 8 weeks forgiveness period. The rent, interest, or utility are considered non-payroll costs. However, if she chooses to use 24 weeks as her forgiveness period, then the maximum amount that can be forgiven just on her compensation will be $20,833, which is her loan amount. So if she didn't pay any rent, interest, utility, that's fine. The full amount can still be forgiven. But if she chooses to use the 8 weeks as a forgiveness period, and if she didn't pay any rent, interest, or utility, then she can only be forgiven $15,385. The other $5,500 will still need to be paid back to the bank. Some additional payroll cost guidance from the Flexibility Act was, so if you are a self-employed individual, if you are a general partner in a partnership, if you are an S-Corp shareholding employee, you cannot include your health insurance premium in the forgiveness calculation. So if the S-Corp paid the insurance premium for its shareholder employee, then the S-Corp cannot include the premium for the owner in the calculation. For the retirement plan contributions, such as 401k, if you are a self-employed person or a general partner, you cannot include your retirement plan contribution in the forgiveness calculation. However, if you are an S-Corp shareholder employee, if the S-Corp make a retirement plan contribution for you, you can include that contribution amount in the forgiveness calculation. But there's also a cap. If you are owner employee, the amount that is included in the forgiveness of your retirement plan contribution is limited at 2.5 months of the 2019 contribution amount. So you will take the 2019 retirement plan contribution divided by 12 times 2.5, and that's the maximum amount you can include in the forgiveness for the owner employee for the calculation. For the qualified costs, which include the payroll costs, we talk about the wages, the health care benefit, retirement plan benefit, the rent, interest, utility, they must be paid during the forgiveness period. Or it must be incurred during the forgiveness period and must be paid on or before the next regular billing cycle. So for example, ABC received a PPP loan with a forgiveness period from April 15 to June 9th. So we're using an 8 weeks period. Its electric bill of $100, which is for the period from June 1st to June 30, is due on July 10, which is due and paid after the end of the forgiveness period. However, since that electricity bill covers part of the forgiveness period, you can do the proration and prorate portion of that electricity bill in the forgiveness calculation. So you can include, let's say if it's $100, then you would take $100 divided by 30 days times 9 days, then that'll be an amount that can be included in the forgiveness. You want to be honest and not exaggerate your expenses. There could be a significant amount of fines if you exaggerate your expenses. Say if you only pay $100 utility, but you put $1,000 in your forgiveness application. If the bank, the lender find out, then you can fine up to $250,000 and $1 million if you get a PPP loan from a federal insurance institution, which most of the banks are. Or you can be put in prison for up to 5 years, and 3 years if you submit the application, forgiveness application to the federal insurance institution. The big change, the other big change came out of the Flexibility Act is that the loan repayment period, it got extended from 2 years to 5 years. So if you receive your PPP loan after June 5th, then your loan repayment period is automatic 5 years. If you receive your PPP loan before June 5th, your repayment period is still 2 years, but you can negotiate with the bank. the bank agree, you can change the repayment period from 2 years to 5 years. The interest rate is still 1%. There's no change to that. And you don't have to, let's say if you can, not 100% of your loan amount can be forgiven. You do have to pay back portion of the loan amount. You don't have to pay it back until the loan matures. The other big change from the Flexibility Act is before June 5th, if you receive the PPP loan, you cannot defer your employee payroll tax deposit. But after the Flexibility Act, you are allowed to defer your payroll tax deposit 50% until end of 2021 and the remaining 50% until end of 2022. So a lot of our clients ask, is it beneficial to defer the payroll tax deposit? We do recommend that if you decide to defer your payroll tax deposit, you still want to reserve the cash in a trust account or some kind of reserve account. So when it's time to make that deposit by end of 2021, you have enough cash on hand to make the deposit. Here I have the chart kind of summarize the changes before the Flexibility Act and after the Flexibility Act. We'll have our contact information at the end of the presentation. Please feel free to reach out to us, and we're more than happy to share the PowerPoint with you. And you can use this chart as a quick reference guide. I'm going to talk about the loan forgiveness procedure, the process. So let's say you went through your 8 weeks or your 24 weeks forgiveness period, and you spent all your PPP loan, and now you're ready to submit your application to the lender. There's two things you need to be aware of. Well, first of all, 60% of your PPP loan must be spent on your payroll costs, which includes salary, employee medical insurance premium, and the retirement plan contribution, and the employer state and local payroll taxes. The other 40% can be spent on utility, rent, and interest. Let's say you meet the 60% task. There's two additional criteria that you need to meet. First, you cannot reduce your full-time employee account. If there's a reduction in your number of full-time employees, then the forgiveness may be reduced. The second requirement is that you cannot reduce your employee salaries by more than 25%. This, the more than 25% requirement only apply to employees whose annualized salary is $100,000 or less. So if you have a highly compensated executive officer whose annual salary during the base period is higher than $100,000, even their salary was reduced by more than 25% during the forgiveness period, that won't impact your forgiveness. So there's a lot of questions around this requirement, the reduction in headcount, reduction in employee salary level, which I'm going to explain a little bit more in this slide. So let's say if you do have a reduction in your full employee headcount, there's a couple safe harbor that you can apply, and if you use a safe harbor, then it won't impact your forgiveness. So let's say your forgiveness ends on October 31st, and your full-time employee was reduced 50 to 40. You have until end of the year, December 31st, 2020, to rehire those employees back. You can hire the original employee who left or who is on furlough, or you can hire a new employee to replace them. As long as your full-time employee, number of full-time employee was restored to 50, and by the time you submit your application, say you submit your forgiveness application on December 31st, and you restore your employee headcount back to 50, then you are fine. Or if you do have a reduction in your full-time employee headcount, but there's a couple of reasons. First is that you offer the employee to come back to work, but they refuse because of personal reason, or because they don't feel safe. If you have a written offer, and later I'll go over some of the required documentation for this safe harbor. But let's say if you meet the safe harbor, if the employee refuses to come back, then you can include that person in your total headcount. The other safe harbor is that for employee who quit voluntarily or asked for reduced schedule or was filed for cause, then that won't reduce your headcount. You can still include them in your full-time employee headcount. The last safe harbor is that you cannot have a full capacity because of CDC regulation. So because the 6 feet social distance requirement, because your facility, the size is limited, so you cannot have all the employees come to work at the same time, then you meet that safe harbor. So let's say now instead of having a 50 employee, you can only have 40 or 35 employees working in the office. That's because the CDC regulation or environmental regulation, then that's fine. It wouldn't hurt your forgiveness. That would reduce your forgiveness. The other thing you need to be aware of, the borrower, they receive this EIDL before they receive the PPP. So when their PPP got approved, the EIDL was enrolled into their PPP loan agreement. So let's say you already received 10,000 advance from the EIDL, and then you receive the 90,000 of the PPP loan. So your total loan amount on your agreement is 100,000. When you ask for forgiveness, you're going to ask for 90,000 of forgiveness. So the question is that, do I have to pay back the $10,000 advance you got from EIDL? The answer is no. Basically, the EIDL converted to a grant, so you have to pay it back. But your forgiveness amount is only 90,000. So SBA will automatically deduct the 10,000 you're receiving in advance from your PPP loan forgiveness application. So let's say you're ready, you make sure that there's no reduction in your full-time employee headcount, there's no reduction in your employee salary level, and you are going to fill out the forgiveness application. So there are two types of forgiveness application. One is the regular Form 3508, which is 11-page document. It is very complicated. There's a worksheet A included. On the worksheet, you have to list out your salaries, the base salary level, and the salary paid during the cover period. You have to demonstrate that there's no reduction in their salary level during the cover period. You also have to provide the number of headcount calculation. So on the regular form, you will take quite a bit of time to fill it out, but it's a regular form. And I'm going to go over there's also an easy form available if you meet the requirement, which I'm going to go over in the next slide. But the regular form 3508 is an 11-page document, and once you filled it out and signed it, then you submit to the bank. After you submit to the bank has 60 days to respond to you to tell you how much will be forgiven, would 100% or just a portion of the loan amount be forgiven. And here's the list of the document that the bank may require you to submit with the application. First is your payroll record, like your bank statement to show how you pay the payroll. If you use the third-party payroll service like ADP, Paycheck, then you will submit the payroll report from those payroll service company to the lender. The other document you may require to submit is your quarterly payroll tax return, such as Form 941 and the state wage report, the E-form, the report you submit to the EDD. And if it's like if you write a check to the employee for their salary, then copy of the cancel check or any other type of approval payment will require to be submitted with the application. The additional document need to be submitted with your application is, again, you need to prove the number of the full-time employee during the cover period and the base period. So you will need to submit like some type of payroll return or payroll tax filing to show the number of employees during the forgiveness period. For non-payroll costs, let's say if you have used the PPP money to pay your mortgage interest, then you will have to submit a copy of the lender amortization schedule and proof of the payment, such as the cancel check or bank statement to show the auto pay. For your rent and the lease payment, then the lender will want to see a copy of current lease agreement, and keep in mind that the lease must be in place on or before February 15 this year. For the lease that was executed after February 15, you won't qualify for the forgiveness. And if you use some of the PPP money to pay your utility, then you have to submit a copy of the invoice from electricity company, and so you have to submit the proof of payment, either a canceled check or the direct debit from your bank account. Some additional document you may need to submit. First is the certified statement from the authorized officer or representative from the company, attesting that all the documentation you submit is true and correct. You didn't make any false document or fake document, and all the money, the PPP loan money, was used for the qualified cost. This was part of the application. The forgiveness application is a place for you to initial sign, certifying that everything you submitted is true and correct. And just need to be mindful, be prepared for an audit, especially if your loan amount is over $2 million. Based on what we heard is that if the loan amount is more than $2 million, it's highly likely that there will be an audit on the setting of the PPP loan. And also, this is just a regular record retention requirement that we recommend you keep the document for at least 6 years. So the second type of forgiveness application is the Form 3805C. This is we call easy form. So instead of the regular 11 pages application, this is only 3 pages. And I'm going to show you the 3805 easy. You will see that the form is really easy to fill out. There's only a few numbers you have to provide on page 1. There's no calculation required. You do need to sign and certify that you meet a requirement to submit the easy form on page 2. And then once you complete it, sign and date, then you submit to the bank. So who can use the easy form? One of the person can use the easy form is you are a self-employed individual with no employee. So if you are a Schedule C filer, you apply for a $30,000 loan, you spend all the money on the qualified cost, you have no employee, then you can use this 3805D. The second applicant who can use the 3805D is that you do have an employee, but there's no reduction in the salary level or reduction in your full-time employee during the cover period, then you are qualified to the 3805D. So I have a client with a small S corporation. They only have 2 employees. So the 2 employees was working for the company during the entire cover period. There's no laid out, there's no reduction in the headcount. And also they are getting the same salary as they getting before. Then they qualify for the Form 3805D. Like I said, the easy form is much straightforward and much easier to fill out. I think they estimate that if you are using an easy form, you shouldn't take 1.5 hours to fill it out. So I'm going to show you the form very quickly so you have an idea what the easy form is looking like. So here's the 3805 easy. This is the first page. As you can see, you just need to put in your enter your company's legal information like name, the business address, the ID number, the primary contact, the phone and email address. You have to provide your PPP loan number, the amount, when did you receive your PPP loan, number of the employee at the time of the application, and number of employee when you ask for when you submit this forgiveness application. If you receive the EIDL, you have to put it here. So like I said, if your total loan amount is $100,000, but that includes $10,000 advance from EIDL, then you have to put in there and deduct from your forgiveness amount, your loan amount to get a forgiveness amount. Then you have to give provide your payroll schedule, how frequently you pay your payroll, is weekly, bi-weekly, semi-monthly, or monthly. And here you have to provide the cover period. So you don't have to decide whether you're going to use 8 weeks or 24 weeks until you submit the forgiveness application. But when you submit the application, you cannot change your mind. After you submit the forgiveness application to the lender, then whatever the cover period you use is whatever you calculate your forgiveness. Like I said, even you use the normal cover period, you can choose to use the alternative payroll cover period if you adjust the payroll cost. Here, if you have more than $2 million in the loan, you have to check this box. And here, this is where you calculate how much can be forgiven. So first line 1, you provide how much of payroll costs you paid or incurred during the forgiveness period. Payroll costs include salary, healthcare benefit, retirement plan benefit, and the employer state and local payroll taxes. If you pay some non-payroll costs, then you, like mortgage interest, rent, and utility, then provide the total amount paid or incurred during the forgiveness period in line 2, 3, 4. Keep in mind, line 1 must be at 60% of your forgiveness amount. So line 5 is a pretty straightforward math. You just add up all the amount on line 1 through line 4. So let's say you total incurred the line 5 is 100,000, your PPP loan amount 100,000, and out of that 100,000, 70,000 is a payroll cost. You meet a 60% requirement, then the entire 100,000 can be forgiven. So on this easy form, the only calculation you need to provide is on the bottom of the page 1. Then when you go to page 2, basically you just initial on all the one that is asking the question, saying that you certify that you use all the PPP money on the qualified cost. You spent at least 60% on the payroll cost, and you didn't over any compensation paid to the own employee. You didn't go over the limit, and also. You understand that the fund is used for the authorized purposes. You did not reduce salary or hourly wage by more than 55% for any employee who make $100,000 or less on an annualized basis. So after you certify all this, you qualify to use the easy form. You just need to sign and date. And like I said, this part is to apply some safe harbor. To say you do have a reduction in the employee headcount during the cover period, but you meet one of the safe harbor, for example, the reduction is due to the government regulation, then you just initial the one that apply to you, you can still use the easy form. And then you just need to sign a date, and that's all you need to do. This is just the instruction. So basically just the first 2 pages that you need to fill it out, complete, and then you can submit to the bank. Let me go back to the PowerPoint presentation. I'm going to ask if you can see the PowerPoint.
No, we cannot.
Yes.
Yes, it's coming up now. Yeah.
Thank you. Bear with me for a second. Just try to get back to that PowerPoint here. So we talked about there's additional guidance issued by SBA on August 4th. Here's additional guidance is that for the cover period, if you receive the loan before June 5th, then you can choose to use 8 weeks or 24 weeks. But if you receive your loan after June 5th, then you must use 24 weeks. But so the second additional item is that you can have two cover period. You can use cover period for non-payroll costs and use your alternative cover period for your payroll cost. So let's say one of my clients, they have hourly salary employee, they have the monthly salary employee. So for the hourly employee, they will pay weekly or bi-weekly. So for the weekly and bi-weekly payroll period, that can be lined up with the 8 weeks or 24 weeks. So it will be more beneficial to use the alternative cover period, because if you use the alternative cover period for the salary, then you can line up your cover period exactly to your payroll period. It could be a little bit complicated, so I definitely recommend you contact us if you want more clarification how to use the cover period, the alternative cover period to perfectly match with your payroll, so that can maximize your forgiveness. The other additional guidance from August 4th is that you cannot prepay your healthcare benefit and retirement plan contribution. So let's say if you have a medical insurance premium that's due a month after end of your cover period, and if you want to accelerate payment, so you just pay within your cover period, unfortunately you cannot do that. And also what we talk about, if you are owner employee, let's say if your company is a C corporation, then you can include the state and local payroll taxes, the medical insurance premium, and retirement contribution pay for your owner in the forgiveness calculation. But all that, the owner employee, the salary plus the state and local tax you pay for the owner employee, the healthcare, retirement plan, everything add up cannot exceed $20,833. Let's say if the company is S Corp, as we mentioned before, you cannot include the medical insurance premium you pay for your S Corp shareholder employee. You can only include the state and local tax, the retirement plan contribution, and the salary for the S Corp shareholder employee. But again, the total cap at $20,833. And the other thing, and for S Corp shareholder employee, this only apply to the shareholder who own more than 2% of the S Corp. The other thing you have to be aware of is that the family attribution rule apply, which means that if you have an S Corp that has, let's say, 10% shareholder, and the daughter, the children also own this S Corp, own at 1%. Even the daughter only own 1% of the S Corp, but because the family attribution, that means the daughter has to include her parents' ownership, so the daughter eventually is own 11% of the S Corp. So this $20,833 rule apply to the daughter as well. If you are a Schedule C filer, you are a self-employed person, or you are a general partner in a partnership, or you are an LLC owner, then you cannot include the state and local tax that the company pay for you, or the health care benefit and retirement plan contribution. The only thing you can include in the forgiveness calculation is your compensation. Or like if you're a Schedule C filer, is your net income from Schedule C. You cannot include any contribution you make to your SEP IRA, to your retirement plan in the forgiveness calculation. Like I mentioned, the pre-health care benefit and contribution to the retirement plan are no longer allowed based on the additional guidance. For the interest expense, again, there's more clarification. If you pay interest on the unsecured line credit, that's not eligible for the forgiveness. Only the interest paid on loan that's secured by real or personal property qualify for the forgiveness. So like mortgage, that's secured by a building, or if you have an equipment loan that's secured by equipment, you have a loan on your truck, all those qualify for the forgiveness. If you use the PPP money to pay some rent, the lease must be in place on or before February 15 this year. But let's say if you have a lease that was in place before February 15th, but it was renewed in March, that's okay. For any lease that was renewed or mortgage that was financed after you received the PPP, then the rent you pay on those leases or interest paid on the refinance mortgages that still count. The other additional guidance as mentioned before, so if you do have a reduction in your full-time employee headcount, but you cannot rehire a person or you cannot find a qualified individual to fulfill that position, you can apply safe harbor. So you won't impact your forgiveness, but you must inform the California Unemployment Insurance Office within 30 days after you receive the rejection of the offer from the employee. So you must have a written documentation to show that you did offer the employee to come back to work, but the employee refused, or you did try to add or try to hire somebody who with this similar qualifications background, but unfortunately you cannot find the right person. As long as you have the documentation to support that, then you can apply the safe harbor, then you won't affect your headcount and won't impact your forgiveness. Now I'm going to hand it over to Kelly Buck. She's going to go over the financial accounting aspect of these loan forgiveness.
Thank you, Bella. I'm going to talk a little bit about the recognition piece of it and the financial statements. So there's some initial guidance that came out on the recognition of the forgiveness, and it's through the AICPA, which is the CPA governing board. So we just want to kind of preface this that, this is what has come out now. Obviously, like Bella has mentioned a couple times, this is there could be changes coming down the road, but this is where you would find information on how to recognize this in your financial statements. All right, Bella, next slide. So one of the things that I wanted to talk a little bit about is right now, or just, maybe about 2 weeks ago, was June 30, which is a big reporting period for a lot of organizations, as well as if you're looking at your financial statements, looking at your budget, that's kind of the halfway point for a lot of companies. So that's why it could be important to how you want to recognize or how you're going to recognize, especially if you're presenting your financial statements to an outside party, to the bank, or if you have shareholders or something like that. So the first method to recognizing the PPP loan in the financial statements is the debt model. Basically, the loan being recognized as a liability until you get that legal documentation for forgiveness. So that's after the application has been processed and you get the final piece of paper from the bank saying the loan is forgiven. So until that point, the loan would be recognized as a loan in your financials, and there would be no kind of release of the funds into revenue until that official agreement is received. Basically, the way to look at it is potentially, and if you're looking at mid-year point, June 30, is that the expenses that are being incurred in the use of the funds that relate to the forgiveness are going to happen, potentially some of what happened prior to June 30, especially when you're getting the loan funds in March and April. And then the forgiveness of the loan is not going to happen until after June 30. So that's just something to keep in mind if you're using the debt model. However, it is the easier of the two models, and it is a more conservative approach in the financials and presentation. So Bella, if you'll turn to the next slide, we'll talk about the second model that's available. It's called the conditional grant model. So this model is basically you are recognizing the loan in essence as a government grant that is expected to be forgiven. And in this model, you're going to recognize the forgiveness of the loan, the revenue piece, along with the qualifying costs. And so I just want to make sure that it's clear that we're just talking about financial statement presentation, not so much the actual, application piece of this. This is just financial statement presentation. And in this model, the benefits are that your expenses and your revenues are going to be in the same period because you would be recognizing them together. The drawback is that if there's any kind of unqualified cost or if there's any potential risk that you may not have the loan given in full, you may recognize gain early, probably unintentionally. So just keep that in mind depending on which model you choose for your financial statement presentation. And then I think I hand it back to Bella. We go to questions. Perfect.
And here's you can see this is our contact information. So if you get a chance, you can write down our email address and our telephone number, or go to our website. And then we have a special section for the COVID-related tax incentive or any new information on PPP. So feel free to check out our website, go to our COVID-19 resource section, and we continuously update. We post all the updated information on our website. So if you want the first-hand information, you can always find it on our website. Or we also send out like special tax alert, accounting and audit and insurance alert, nonprofit or our retirement plan alert. So if you would like to be on our distribution list, feel free to email us and we will add it to our distribution list so you can always get our first-hand information.